Hello, today is Sunday, the 22nd of July, 2012. This is pretty much a two different part video, two totally different subjects. The first half regarding the Colorado shooting and James Holmes, and the second half will be technical analysis on silver on multiple time frames, which if you are watching this via search, that's normally what this channel is about, but really using logic, math, and science to come up with probable assumptions. So let's get started. It makes just as much sense that a plane with jet fuel would cause a building twice to collapse at free fall speed than it does James Holmes to be that of a psychopath. The probability odds a psycho would turn themselves in without resisting in any form is laughable or unrealistic. Now, before getting into 3, 4, and 5, I think it's safe to point out that there were multiple people within this crime. For Mr. Holmes, if he was a psycho, would have to have been able to get all of the guns, ammo, and equipment, which is something he, from the profile I see of him, would not be able to afford, making the whole psycho case unrealistic. But you know what? We can find out for sure, in theory, exactly what happened. And to find the real killer or killers, my suggestion would be to use hypnosis, as this is the best lie detector, which is better than a polygraph that I know of given today's technologies. In a trance, you ask Mr. Holmes what triggered him to do such an event. Ask him where he got the guns and the gear. Now, if he was, of course, hypnotized to do such an event, then there had to have been some sort of trigger for this to go off. And he would exactly tell you what the trigger was and state, of course, where this was to come into play. If this was not a situation where somebody had used mind control and hypnosis and trance to have him commit such a crime, then the most likely cause of that would be trauma. And I can guarantee you that you will find out if he was hypnotized to do this or if it was based on trauma. And then you'd even find out what the actual trauma would be. Now, I'm going to make a very easy prediction, and that is nothing like this will be done. The mainstream media will really make this guy look like a psycho, and 97, 98, 99% of the people will believe he was a psycho, like they believe jet fuel caused the trade centers to go down. That's it for this one. Now we're going to switch into the silver market. Start with long-term analysis and then move it in towards short-term analysis. Silver is a precious metal. It is on the periodic table of elements with the atomic number of 47. Silver is made in coins and bars known as bullion form and has uses on several different fronts. Technical analysis is a way of using the charts in itself to determine areas where it may go higher, may go lower, or so many different things. There's many different methods of using technical analysis, and I most certainly have a unique method, different than others people. Other people's work well as well, but again, mine is unique. I like to use trend line analysis, so I can see stuff like, okay, well, this trend line, I could say this trend line's intact really well. An area that was resistance pretty much being support, but yeah, you can also say it's breaking support along the way. You can also talk about a pattern of higher highs and higher lows, or if it's in a downtrend, lower highs and lower lows. You have this high, you have this high, you have this high, you have this high. Each of the lows that followed the highs were here, 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 and so far here. So there has been 3 consecutive higher highs, and there's been 1 lower low within this bull market, to say the least. When this thing will correct back higher and then challenge the previous highs, ultimately making new higher highs, is almost impossible to tell. For this line in the sand, or 1910, is an area which would be a 38.2% retracement from the breakout levels of $4.05, probably back down here somewhere within that bull market run. We're now going to switch this up to the monthly chart. Each one of these 3 months has 100 periods, so this was 300 months. On the monthly chart, we'll have a chart showing only 100 months in total duration. And what's important here is this symmetrical triangle that has just started to form within this chart. And there she be. The movements over the last couple of months are just so microscopically small. The size of this candle that we have for the month of July is extremely micro. And it's almost the end of the month, which continues to show the midterm to short-term indecisiveness to be in place. Let's move this on to the weekly chart. And the weekly chart can show the entire symmetrical triangle, or the downtrend line. As we can see, it's something like this. Connect this top, connect this top, which hits this one in here. Still a long ways away before it's coming to a conclusion. But what's interesting is the pattern of the lows. And I did this earlier this week, so I'm going to do it now. I'm going to draw a line. What I'm going to draw is the top to the bottom, and I'm just going to move it over here somewhere. So that was this sell-off. This sell-off started here, ended down there. So the rate of descent wasn't quite so big. Then there was this sell-off. Again, the rate of descent slower. And as of now, the sell-off is down to here. Of course, if we make a new low, then that would change. I'll draw a little box around this. And the movements on the right-hand side determine how long something is. So the longest sell-off has been the most recent one. The size of the bottom represents how deep the sell-off is, which means that the second sell-off was the most deepest one. And that's the downtrend. Now, as far as the uptrends, we could do the same thing as well. Let's first take the one from the breakout lows in here. I'm gonna make this one a bit bigger again. There we go. So we got rally number 1, and then from this low to this top, we had rally number 2, which was obviously more of a higher rate of ascent. Rally number 3. Rally number 4. So that had a decent rate of ascent as well, but it was short. Rally number 5. And that's it. So the two big rallies you can see from here and here were obviously bigger within this here, showing that when we make another box again within it, that time is on the right-hand side. The longer you move to the right, the longer the duration of the bull market. And the larger you are to the upside is the larger the movements are. So the 3 rallies that have occurred within this bear market trend has obviously been nothing in comparison to where we see things today. Now, if we make a move of just say something like this, place it here, well, that would bring us to $49, $48 in price. And that's only, of course, if we have a movement sort of like we had before, with the rate of ascent being fairly high, with the tide being as high. And not only that, but when you see a situation where you go from 26 up to 50, in a matter of less than 3 months, then that still tells me it's possible that we could even break the previous highs before the end of the year. But the key word with that is only possible, because it's done it before, and at any point, if there's any forces that can at least mimic what occurred, if not even have it at a greater level of a rate of ascent or time, then who knows how it would play out, to say the least. But again, it's not good to just think of just one side, because when you barely have 26 being tested here because it bounced up fast back to 30, and then you have 26 that immediately had a bull market run up to 37, and now you have 2 months where it's pretty much finding support at this level. That's a different way of this thing playing out, where if it's not able to get above this 18 period average, which has been in a decline mode, then it can very easily break through. And if you want to make it another type of trend line, then draw a trend at the 18 period average of lows, right, like that, which is pretty much the resistance that's been going on in here. And using the exact same support line of 26, that means this descending triangle will be coming to a conclusion pretty much by the end of next week or the week after. Just another thing to point out. Finally, the daily chart, and this would be the final one for the day. This chart is an absolute mess, but as far as trend lines are concerned, the important one is the one that's been hit on several of occasions. It has yet to have gotten above this one. Also, you have this significant 30 resistance area, which was tested close to it once. It got up to 29.91, which was about a dime short of the level. And well, now it's been going down. It's been in the sideways range for quite some time. The last couple of weeks is just going nowhere, or in that of a major stalemate. Thank you for tuning in, and have yourself a great week. Bye-bye.